Okay guys, back with another video, part 3 of foundational learning. Today we're going to be covering market structure. For anybody who's not a part of the Discord, I have a free Discord, which I will put the link in the description box below, where you can come and join. Check it out if you want to start trading and you don't have a strategy, you don't have a system. That is what these videos are about. Okay, so horizontal support and resistance was part 1, order blocks were part 2, and now today we're covering part 3, which is market structure and why it is important. Okay, so let's just go over this. I'm going to try to keep this as brief as possible. I want to keep things as simply as I can, because I understand that some people are just getting into trading, and if I give you guys too much, it's a information overload. So let's start simple and let's go over market structure today. So why is market structure important? It's important because it gives you a trading bias for the month, week, the day, and the hourly time frames. Okay, so when you approach your chart every single day, you're starting with a blank chart, empty space, and you're starting off by marking your horizontal support and resistance. You're identifying your order blocks, and then the third thing you want to do is identify the market structure, because it's going to tell you in whatever direction the trend is currently in, that's the direction that you want to be trading with. Okay, if it's uptrend, you want to be looking for longs. If it's in a downtrend, you want to be looking for shorts. And of course, if it's just in a range, then you can trade it both ways within that range. Okay, so market structure is important for your trading bias. Okay, so for the direction that you are looking to trade in is based upon the market structure. Think about it this way. You always want to trade with the trend and not against it. If you have ever swam in a river where the current is flowing, you never want to swim against the current, right? You want to swim with it, because by swimming upstream, you're just giving yourself a hard time. But rather swimming downstream, the way that the water is flowing, it makes things easier, and there's a higher probability that things will go smoothly. So it's the same ideology when it comes to trading with the trend. Okay, trend is your friend. So market structure gives you a heads up on when market conditions are changing and when you need to shift your bias. So if I'm long and I notice that price was making a high, higher low, higher high, higher low, higher high, higher low, but then all of a sudden we make a lower high, that is my first heads up that something is shifting and I need to change my bias, whether that's taking profits on my long trade or completely closing it, because after we fail to make that next higher high, then the next thing I'm expecting is a lower low. Okay, and we will cover that. So it gives you a heads up when market conditions are changing and when you need to shift your bias on the direction of the trend and your trade. Okay, so market structure allows you to plan for the next trade in advance. So one of the things you don't ever want to do is just come to a chart and you see price moving and you just decide, oh, I see it going up, so I'm just going to buy here, or oh, it's going down, so I'm gonna sell it here, right? You want to identify the market structure so that therefore you're able to see what direction the price is moving and you can plan your trade accordingly. Sometimes weeks in advance, months in advance, weeks in advance, days in advance, and even hours in advance. But the last thing you want to do is come to a chart without doing any analysis, foundational analysis that is, and just jump into trade. Okay, so market structure, the last point here, it just keeps things simple. Okay, so whenever you're in doubt, stay out. But when you can identify the market structure, it should make things 10 times more easy for you in terms of the direction that you need to be trading, and just follow that one simple rule. What is the market structure? And go to your charts after this lesson and practice identifying market structure and changes in market structure, and just notice how when market structure changes, how price responds to that. Okay, so I have one more thing to show you. And so what I've done here is I've just taken my path tool, which is what we're going to be using today. Once we get into the charts, you can find it right over here where you have your brush. You'll see this probably on your chart. It's going to be a brush. On mine, it's the path, because I've just recently used it. But you can just come right over here in the left side pane of your trading view where your tools are. Just come right here to the 1, 2, 3rd icon down. Click your arrow right there. See, now it's a brush. Click your arrow, open it up, and you'll see the path. Put a star on it and it'll add it to your toolbar down here so that you can use it, and right there will be your path. Okay, so I click my path, and then this is how I am going to be identifying the market structure. So what I've done here is given you an example of an uptrend. and one example of a downtrend. Now this is simple and easy to understand. As we get into the charts, you'll see exactly how this looks, and this is the terminology for it. Okay, so the H means high, the L means low. Double H means a higher high, so we had a high, a low, and there's a higher high. Now we put in a higher low. That's what HL stands for, is higher low. And so then we go up to put in a higher high. Okay, that's for our uptrend. All right, and now for our downtrend, let's say we just come off of this high, and now we put in a low. Then we put in a lower high. Okay, LH stands for lower high, L stands for a low. All right, so we put in a lower high, and then we get our lower low, a lower high, and now a lower low. After you get that initial change right here, after you see this low, lower high, lower low, market structure has changed. Okay, keep that in mind. That's going to be important as we get into the charts. So, and vice versa here. All right, once we see a high, a low, a higher high, and a higher low, market structure has changed. All right, confirm it by one high holding a higher low. Once you get that next high, market structure has shifted. You look for the higher low for the next higher high. And then again, for the downtrend, once we come off the high, we get our low, our lower high, and once we get that second low, the lower low, the next low, market structure has shifted. All right, so what we're going to do now is we're going to go over to the charts, the monthly, weekly, daily, and the 4-hour time frames, where I already have these lines plotted out. So let's go. Okay, so here we are on the monthly time frame. As you can see, I've already plotted out the trend for the monthly. One thing I'm going to ask that you guys do is I want you to add these indicators, because it's going to help you. If you don't understand market structure, these indicators will help you out a lot. First, starting off with the fractal right here. So what you're going to do to add these indicators on your chart is go up to your upper pane right here on the top of your trading view screen, and I want you to go to this icon right here that says indicators, metrics, and strategies. Click on that. I want you to come in here and type fractal, and you're going to be looking for the fractal that's by Igor T. Okay, shout out to you, Igor, because this tool is very useful. It's very easy to use and simple to understand. But what you're going to do is once you find it, you're going to put a star on it right there, so it'll add to your favorites list, which you'll have access to right here in your indicators section. So there it is right there. So add your fractal indicator. The next indicator you're going to want to add is zigzag. Okay, so all you do is just come over here again, type in zigzag, and you'll see it pop up first thing right there under technicals. Same thing, put a star on it, and it'll add it to your list of favorites for your indicators. Okay, now let me briefly go over what the fractal is. So I'll turn that one on, and to activate it, all you got to do is go to where it is and just click on it, and it'll add it to your chart. All right, so what is the fractal? The fractal is basically market structure, the market structure cheat code. And so it's letting you know when price is reaching a pivot. So if price, for example, was coming up like this, and then we reach an area of resistance, it's going to pivot. Price is going to pivot, and it's going to come down, find an area of support, and then it's going to pivot again. So the areas where price completely changes direction, then it's going to make its higher high, it's going to pivot, it's going to make its higher low, it's going to pivot, then it's going to make its higher high, it's going to pivot, right, and so on and so forth until the trend changes. Okay, so the fractals are very useful because it helps you to identify when something is changing in the market, and also when you have I'll have to do a separate video on good highs. So a good high and a bad high versus a good low and a poor low. Okay, so poor highs, poor lows, good highs, good lows, that will be in a separate video. But all you need to understand now is that you use these fractals to help you confirm. It's just an extra confirmation. When you see one of these, doesn't mean that you trade the opposite direction. I mean, you need to do more analysis than that. But in terms of market structure, when you are plotting out your chart in the morning before you decide to start your trading day, use your fractals, get a sense of direction on what the market's doing, where it's going, starting with the monthly time frame, and from that context you move down to the next time frame, which will be your weekly time frame. Okay, give me a moment, you just have a sip of water. All right, so how this essentially goes is like this. So what you'll see is I have these fractals, right? Now you may be wondering, well, why didn't you put the lines here and here? Because this is all smaller term stuff. So if we just zoom in here here was our initial low, right? There's our high, there's our higher low. So this is the example that I gave in the beginning of the uptrend and the downtrend, when you know that structure has shifted. So we come off the high, we put in our low, our lower high, and then we get our lower low. So what do we expect after that? After we've changed market structure, we expect a lower high. And what do we expect after a lower high? We expect a lower low, right? Okay, now that's just in this current range. Now, we are still bullish. Why are we still bullish? Because price right here, let me hide that now. Price right here did not take this low right there, okay? It didn't take that low. So therefore, we now have an established trend that we are looking at. So we have our first high, we have our first low, okay? Then what we get is, we get our change in market structure. So we get our high, low, higher high, and then we get our higher low right here, followed by a higher high. Again, this is the monthly time frame, followed by a higher low. Now, this is where market structure changes on the monthly time frame, because what follows is this, our higher low, but we fail with our lower high, we fail to take the high, the all-time high. In this case, that one, okay? We fail to take it out, so therefore, market structure has now shifted bearishly. So when we fail to take the higher high, so we have our higher high, higher low, higher high, higher low, lower high. Once we get this lower high, we now need to start shifting our bias and expecting a lower low, okay? Now, there's a strategy that you can add to this, and it's simple. It's called liquidity grabs, and that is the case right here. We get our higher low, fail to make a higher high, so therefore we look for a lower low. All right, guys, and now we got to remember this is the monthly time frame, so therefore this takes time to develop, obviously, but this is why it's important to check your market structure every single day, every single week, and of course every single month, so you can just see where are your swing highs and your swing lows in accordance to your market structure. So if in this section we were in an established, behind that, if we were in an established uptrend right in here, then what we would want to see is for the trend to continue, right? So obviously the trend was continuing, because this was still a higher low, but it stopped right here. It failed to continue right here. So if, let's say, the month just closed here on March of 2022, and we are seeing that we have a fractal printed here, well, now what we're going to look for is we're going to start looking for shorts, because we failed to take out that high, right? So price was coming down. It had a couple attempts to pump back up again to make that higher high, but it failed. And then it got the fractal, and then we see the lower low taking out this low liquidity and this lower liquidity as well. Okay, so now we see our higher low, lower high. There's our lower low. There's our lower high once again that fails to take this high, and then we get a lower low taking out this poor low right here. Okay, so now that we have the monthly trend established and marked out on our chart, we can shift down to the next time frame, where we will then find what is our more local trend. Okay, so let's go to the weekly. So now what you'll see here is I already have the weekly trend plotted out. Now why I didn't continue this monthly is because of this. I'll go back for 1 second. It's because this high hasn't this candle hasn't closed yet. I mean, I'm almost certain that it's going to close with a higher high taking out this one here, but just to wait for confirmation would be best. But just as we know, what we would like to see is, we like to see for price to do what it's doing now. So this was our last high on the monthly time frame. This was our last high, right? And it was a lower high, and it was followed by a lower low. So now in this case, we would say that, okay, maybe market structure is changing, because what happened is we come up here, and if we close this, we end up changing market structure by putting in a higher high. Yeah, so okay, the arrow's not showing on here for some reason, but that's okay. What I'll do is I'll use this. But when we close this candle up here, if we close it up here, we're looking for a change that we see the change in market structure. Now we just taken out that high. So what we expect after that is we expect a higher low. All right, which would just be right most likely in this region. Okay, so what we then expect for the monthly continuation would be there's our higher high, and we look for a higher low followed by a higher high. And really what we would be targeting is this next zone right here. We'd look to take that one out, so it would be something similar to this. We have our high, our higher low, then we get a higher high, a higher low, and we look to continue a new trend. Okay, so now let's pop back over to the weekly time frame, where we pick up our trend on the weekly time frame where we last left off the monthly, because remember, this monthly candle hasn't closed, and so we're waiting for this to close before we confirm this as a higher high here that took out this one. All right, now I would suggest you guys watch this once or twice, preferably 3 times, until you just understand it. And again, if you're not a part of the Discord, I will put the link for the free Discord in the description box below, where you can then join up, become a member of the Red Pill Crypto community, and feel free to ask questions where you can communicate with me directly, and I will do everything I can to help you out. Okay, so now that we've picked up where we left off, we ended our monthly here, and now we're on the weekly. What we see here is that the weekly time frame is now in an uptrend. Now, how can we identify this? Now remember the fractal tool. On the weekly, we were in a monthly downtrend, right? This was our lower high on the monthly, this was our lower high on the monthly. So now when we zoom in and we're on the weekly time frame, we can see that these fractals are also showing us lower highs on the weekly time frame. So this was a lower high. Let me hide the arrows now. That was a lower high. This was a lower high. And this was a lower high. Okay, and then we get our lower low, which was taken out, which took out this one. Okay, this one took out these right here and took out that one. All right, so how can we tell that market structure has changed on the weekly time frame? Because of this right here. So what we see is all of these lows, 1, 2, and 3. Let's put a line on it. All those lows were taken out. I mean those lower highs, excuse me. All those lower highs were taken out. Okay, they were taken out right here, and also we had our higher low, and then they're taken out right here. So we can see that on the weekly time frame we closed a higher high, taking out that one. So this would be our heads up for the monthly time frame now, that okay, market structure has shifted on the weekly time frame. So now what we would like to see is for market structure to shift on the monthly time frame, to give us our first hint and only hint, our first hint that market structure has now changed potentially on the monthly time frame. And so what would be confirmation of this? Like I had stated, we close this monthly candle up here, confirming a higher high. What we would want to see follow after that is a higher low. Okay, we would want to see it followed by a higher low. In this case, this could be down to here, taking this one out, and it could just be also just simply right there for continuation to the upside. Okay, now we can see that our market structure is shifted on the weekly time frame. So what would give us the heads up that market structure is now shifted again back to the downside? Well, if we were to start dropping from here and we put in, so you can see, let's zoom in just a little bit. You can see right now there's a low and there's another low right there again on the weekly time frame, right? 2 lows. So if we open up the next week, which would be, if it will show me here, on the 3rd of April. If we open up the next week here and then price just simply comes down and takes these lows out, comes down and it closes below these lows like this, well then we'll look for the lower high, and if we get that lower high and we don't take this one out, what do we expect after that? A lower low. Okay, and if we close down here, now we have a confirmed change in the trend. And so what do we expect after this, guys? A lower high followed by another lower low, which will most likely take out this one right over here. So upon taking out this low over here, then we would expect another, once again, lower high into a lower low. Okay, so that is how that would shift on a weekly time frame. Now if we look at the daily, let's zoom in now, because we know that we have an established downtrend on the monthly time frame, and pretty soon when the month closes, the monthly candle, we may have a change in structure and a change in the trend, telling us that when price comes back down, we're expecting a lower a higher low, and then we're going to be looking for a higher high, which we can see where the next high is for the monthly, which is way up here at this 48k level. So again, we zoom down, we see that the weekly time frame has confirmed a change in market structure. This was the lower high on the monthly. Here is the high that takes out, and also a lower high on the weekly, right? But this is the high right here that takes it out. So change in market structure. All right, and now we go to the daily to zoom in now. So now our bias should be up, essentially. Once we see these highs all taken out with price closing above them, our bias should start to change, and we're looking to be buyers now. When price pulls back, we want to look for buying opportunities. So we want to zoom down one more. So let's zoom down to the daily time frame, and there's still our established weekly uptrend. And so now we pick up where we left off. So what you have here, we pick up where we left off on the weekly analysis for market structure, right? So what we have here is a consolidated consolidation range. So let me mark out the high by putting a horizontal ray at the high, and I'll put one here at the low. Okay, now what we can see is price came and took out this low with this wick right there. So now that could be a change in market structure, but here's the thing, it's undecided because we have a fractal at the high right here on the same daily candle and a fractal at the low. So what happens is we hit the low, and now what we would expect is a lower high. But this is when liquidity gets introduced into the picture. Okay, but essentially what we would be expecting, and I'll cover liquidity in a separate video, but essentially what we would be expecting now is, since price took this low right here, we would expect a lower high. Technically, that's what we would be expecting, because there was our high, there was our low. Price made a lower high with this green candle right here. Zoom in just a little bit. With this green candle right here, that was a lower high. Technically, yes, that was a lower high. And why? Because we come down in price like this. There was our high, there was our low, there's our lower high, higher low, but then we get a lower high and a lower low. Now, what I would like to do is really be confident about this, but here's the thing, it gives you more confidence when the candles actually close below the level. So just like I was talking about on the weekly, we wanted to see, we saw that the weekly closed above this level. It goes hand in hand with what I was talking about with the monthly time frame. I want to see the monthly candle closing above this level as well, to confirm a potential change, a highly probable change in market structure on the monthly, and we would expect the same thing here on the daily. So this is getting into other theory, but if we're just going to follow along with according to the structure, then this is how we would do it. There was our high, there was our low, lower high, higher low, lower high, and there's our lower low. So what we would expect then, guys, it would be a lower high. Now, personally, I'll give you this spoiler. I do expect price to come up here and hit this high again. So just like it come down like this and took it out with a wick, took out the low, I expect it to come same thing with a wick, take out the high. Okay? But in terms of what we're covering, yes, market structure has shifted with that wick, if we're going to class the wick, but personally I prefer to see the candles close. Okay, so if we just stick to that rule, it will make things much more simple. Look for the candle to close. Okay guys, so since this isn't quite clear yet, what we would do is we would just still stick to our clear trend, which is an uptrend for the weekly time frame. So with that in mind, let's go down to the 4-hour time frame. Okay, So we could do the same thing here, pick up where we left off in this consolidated area for the daily time frame. Again, what we see is price came down, it took the low, and now it took it with a wick. It did not close the candle below this horizontal level. The candle closed above it, okay? So now what we'd be looking at here is a simple trading range, which you can mark like this, okay? You can mark it just like that. Now we can get rid of our horizontal levels, and now we are trading in a range. Price is rotating to the high, rotating back to the low, to the high, to the low, to the high, to the low, to the high, to the low. We can make this even more clean by simply going like this, and now we see a more clear picture of a range, a trading range. So again, price comes into the range, rotates to the high of the range, to the low of the range, to the high of the range, to the low of the range, to the high, to the low, to the high. Well, it didn't make the high quite, but then back to the low to take the lows out there. Right here, 1 and 2, took them out. Okay, so now guys, what would we be looking for again? In this case, when we're in a consolidation range like this, we want to see higher time frame structure. That's more important. So let's just take one step back to the daily. Notice something here. This low, let me hide this for 1 second. This low was our initial low. Let me hide this, let's just delete it. So let's follow this. There was our low, there was our high. This was a higher low, guys. But where's the fractal print? It's not there, bear that in mind. Here was our next high. Here was our next low. Where's our fractal print here? We don't have a fractal print here, do we? No. So that was our higher low. Then we get our higher high. Then we get our higher low. But I want you to notice something here. Price printed a fractal right here, but it did not take out the low. It didn't take out that low. Let's just act like we don't see it. Let's go like this. Okay, we'll do that, and then we'll hide this now. So where did our fractal go? It's not there yet. Okay, so when you see something like this, guys, this is telling you that these lows right here, this low, when you don't see the fractal printed here, just like you don't see it printed here, what that tells you is that these lows right here are not to be trusted. They're not to be trusted because those are called poor lows. Therefore, when price is at the lows right here, you want to see this level taken out. You want price to just come and take this one out. So when you see their fractal printed here, that's one of the tricks that the market will do. They'll stop it just shy of taking out the poor low, and that's considered a double bottom, and that is what most traders fail to realize, which is just a setup for a liquidation run, which means price is likely to come and visit that to take out that level where the poor lows are sat right next to each other and put in a better low before reversing the price. Okay, and so what do we see when this happens? We see the fractal printed right there. Okay, and then we see price moving along, and then today, well, technically a couple hours ago, that previous day, we can still call it today, takes these lows out. So notice that the fractal was printed here, but it never took out that low, which this one didn't even have the fractal. So that's the key point. When you're looking for your market structure and looking for good areas to target for take profits or liquidity runs that you could reverse counter trade that, because remember, keeping in mind the context here is that we are in an uptrend on the weekly time frame. We're in an uptrend, so counter trading this downward move wouldn't be a bad idea in the case of we have liquidity sat right here and right here, because these two lows, they're poor lows. Okay, now even this one, guys, personally I would class this as a poor low. I would I would class this as a poor low because it really didn't come down in here to like give that convincing look like, okay, this is you know, a good low that we can rely upon for price to start moving up higher. So I wouldn't class this as a poor low. I would expect this to be hit one more time and then another move to these highs to come and do the same thing on the opposite end, which is take this low, put a clean one in there, not one that's so close hugging one another, put a clean one in there, and then come up to the upside, to do the same thing here, put in a good high, because what we can see here is that these are very, very close, right? If we just go like this, these are very, very close to one another, and we need that good high in there if price is going to move back down. But move back down for what? Move back down to put in a lower low? No. Move back down to put in another higher low. Okay, guys, I'm going to cut the video here. I hope you've understood this. I could come out with a part 2 video, but due to YouTube and I need to get more videos up, I can't go over a 30-minute mark. So I'm going to cut it here. Again, if you guys aren't a part of the Discord, join it. It's 100% free. I will throw the link in the description box below. Until the next video, have a great day. Practice on your charts and go out there and identify the market structure. It will give you a better chance of success in trading and make you more confident that you are trading in the right direction. All right, until next time, bye-bye.